Have you ever stared at your chart and wondered, is the price about to reverse or is it just setting a trap? Here's the secret. The market is always doing one of two things. It's either offering fair value or it's seeking liquidity. And once you know which one it's doing right now, you can position yourself like the smart money does. Now let's break it down into 3 simple but powerful steps. But before that, if you happen to find value along the way, don't forget to hit the like button, subscribe, and turn on the notification button to get notified when we upload a new video. Now let's dive right in. Now, starting out with step 1, which is the market structure, or what I call the foundation of clarity. So every price chart has 2 key things, the highs and the lows, and some of them stand out more than the others. These are what we call the intermediate term highs and intermediate term lows. Imagine a bullish trend. In most cases, the price won't break below these intermediate lows unless something significant is changing. Maybe the trend. In a bearish trend, it's unlikely for you to see the price break above those intermediate highs unless the market is shifting direction. These levels aren't random. They hold significant meaning. Why, you might be asking? This is because they act as magnets, either as respected boundaries or liquidity targets. Now, how do you even identify these levels? An intermediate term high is a swing high with a lower high on both sides, the left and the right. An intermediate term low is a swing low with a higher low on both sides. This is very simple as it sounds, but incredibly powerful. Another powerful step to understand what the market is doing at the moment is the fair value area. This is where the game is being played. Now, once you've marked out your intermediate term high and low, you've defined what's called the fair value area. This is the zone between those 2 points, and it is where the market offers opportunities to both buyers and sellers. Here's how price typically behaves within the fair value area, broken down into 3 legs. The first leg is impulse move. Here, the price drives upward, giving buyers a fair chance to enter the market. The second leg is retracement. Here, the price pulls back so that sellers could get their opportunity to also enter the market. Now, the third leg is price resumption or continuation. Here, the price moves back upward, giving the buyers one more shot into the market. Now, once the price pushes above the original intermediate term high, it means both buyers and sellers have had their fair shake in the market. And at that point, the market has completed its duty of offering fair value. But here's the twist. If price doesn't return back into this fair value zone, something is changing. If the price starts forming bearish fair value gaps, it's not balancing anymore. Now it's hunting. And this will take us to the last step. Now, the third step is liquidity. So people will always ask, where does liquidity hide on the price chart? So in Forex trading, liquidity can be found above swing highs and below swing lows. This means that your intermediate term high has got liquidity resting above it, and the intermediate term low has a liquidity below it. Now, here's the key insight. If price has already moved through the fair value zone, giving both the buyers and the sellers a chance to enter the market, and then fails to continue upward, that's not a retracement anymore. That's a warning. When bearish fair value gaps start showing up after fair value has been offered, the market is shifting gears. It's now seeking liquidity. And the most likely place it's headed? Right below that intermediate term low, where the liquidity pool waits. So, how do we read the market's intention? If price respects the fair value zone and continues in trend, the market is offering fair value. And if price breaks down after fair value has been offered, it's seeking liquidity. So, by following this logic, you no longer have to guess. You can align yourself with the market's true intention, whether it's creating opportunity or running stops. And this is how you can start trading with confidence and with clarity. This broker right here is one of the best Forex brokers in the Forex industry that offers both Forex and synthetic pairs. If you want to trade correctly and not miss any market move, this is the right Forex broker for you. So click on the link in the description of this video to register with the Derive Forex broker and trade efficiently. Go ahead and join our Telegram channel and get access to high-quality expert-curated trade signals every single week. But that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently. So, click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned. I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.